over the last quarter, and perhaps even a little bit longer, our Aussie equity managers in the portfolios have underperformed a little bit by not holding the Commonwealth Bank, which is becoming a bit of an enigma. And I think one of the main reasons they've not held the Commonwealth Bank, either they've not held it or they've been underweight it because it's such an enormous part of our index. It's fallen about 10% in the last week or two in value, but it's still north of 10% of the S&P 200 index. Yep. Now, Jonathan, I know you've done a bit of analysis on this because you and us have been watching the valuation of CBA just continue to balloon. And care to share some insights on the Commonwealth Bank, the enigma that is the Commonwealth Bank of Australia?
Yeah, you've summed that up beautifully. Look, as you know, Eugene, we've had conversations about this, but I know you also very, very kindly read my report every weekend as well, and you'll know that every now and then I get a bee in my bonnet about something. Fortunately, I haven't had too many bees in my bonnet in the last couple of years. I got a bee in my bonnet about inflation in 2021 and blah, 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 and you know all about that. But just more recently, I got a bee in my bonnet about the valuation of CBA. CBA is officially the world's most expensive bank. So CBA trades on a price-to-book multiple in excess of 4 times, whilst at the same time, return on equity has been declining inexorably in the last 5 to 7 years. So the valuations just don't add up. Now, I don't know if this is the right forum to tell everyone why CBA is where it is. But the bottom line is, let's just say this. The Australian industry funds have been buying a lot of CBA in the last 12 to 18 months. And you know, what is curious, even more curious, is that as the return on equity declined, you saw this parabolic move in CBA. So it was just not fundamentally driven. Now, we just saw the results for CBA, and they were cosmetically okay. But at the end of the day, this is a bank that is not exactly growing earnings in any kind of material, robust way. On a price-to-book ratio, which is one of my favorite valuation measures for banks, and I use that comparative measure again across all the world. And you've got the JP Morgans of this world that are great banks, but they're not trading anywhere near the multiples that CBA are. So the bottom line is it's just damn too expensive, full stop. But every banking analyst in Australia has said that now for quite some time. And their price targets on CBA are around the $115, $110 mark. I don't know where it is trading as we speak because I've tried not to look at my price screens on my other screens away from this camera. But the bottom line is CBA is very expensive. Yes, it's just fallen 10%. But if it went to anything approaching fair value, let's be kind, just in case there's an employee of CBA listening to our discussion. If I was really generous to CBA, it would be around 125 is probably where it should trade. There's some of the world's best banking analysts say the thing is not worth more than $100. Anyway, every Australian pretty much has some exposure to CBA because, as you say, it's such a large part of our market. It is an enigma. That's a great word to use. From a valuation perspective, it doesn't make any sense whether that is spelt with an S or a C. So CBA is the most expensive bank in the world, and it just should not be where it is. And the Australian industry funds should stop buying CBA on a daily mechanical kind of robotic basis and actually look at its valuation.
Okay. Well, that's interesting. But it is, yeah. But given how big a part of the index it is, it does carry weight as to the performance of an active fund.